Tech selling off again today and dragging the S&P 500 and NASDAQ lower for a third straight day. Our next guest still sees a strong case to buy the dip. Let's bring in FundStrat's Tom Lee. Tom, it's good to catch up with you here. Obviously, it's a bull market. Buying the dips generally tends to make sense. It's certainly been rewarded in the last several months, but it's almost like we haven't hardly had much of a dip to speak of. We had these little wobbles lower, another one right now. Are you confident that they're going to stay so shallow?
That's a great question, Michael. I think one of the reasons these dips have been shallow is that measures of investor leverage, whether it's margin debt, which is still below July 2023 levels, or cash on the sidelines, which hit a record 6.1 trillion last week, or this past week, shows you that investors are still uncomfortably underinvested, and therefore these dips are opportunities to add. I've been traveling in Latin America for the past week, meeting with a lot of pension funds, and we're getting the sense that these investors are waiting for a dip. So as soon as you get some sort of wobble like today, I think these are quickly met by buying.
Yeah, been the case. Although, how do you, I guess, jive with the fact that you've seen some of the other indicators of positioning and investor sentiment, whether it's investment advisors or retail investors or call option volumes, seeming like at least things have gotten a little bit extended?
Those are extended because, data really tends to capture the TMT hedge positioning, which does look extended. And AAII tends to reflect bullish sentiment, but it doesn't necessarily reflect actual positioning, which, tell by margin debt still quite low. And other measures don't necessarily capture what private bank and wealthy individuals and households are doing, which, we hear from our wealth managers still have a very conservative bias for their clients. So I think that we're not really as exhausted in terms of positioning or even sentiment as we were in October 2021.
Now, I know, Tom, that you feel as if there's a long-lasting outperformance cycle possible in smaller stocks. A lot of false starts in this direction. Been some on the Russell 2000 and other small caps with rates going higher. What sets the scene for you to say that small caps will start to work on a relative basis?
Well, it's a constellation of factors, Michael, that are really coming together for the first time. We're emerging from a pretty terrible inflation cycle that was crushing companies, especially their ability to raise prices relative to larger companies. And it's coming at a time when the Fed is about to make a pretty abrupt move, being supportive of the business cycle instead of fighting inflation. And on a valuation side, small caps are trading at 44% of the price to book of large caps. That's exactly where we were in 1999, and that was the launch point for 12 years of outperformance. So I think when investors start to allocate to stocks and the Fed starts to be visibly cutting, Fed is not clear when they start, but when they start, I think it's going to be a big tailwind for small caps.
Now, the valuation mentioned going back to 1999 or thereabouts absolutely seems to be the case. The length of underperformance has been something similar. But if I look back at that period, after peak in the market, a lot of that outperformance by small caps came because large cap growth just imploded. I mean, you did in some of the largest stocks. Now, obviously, small caps held up better and then went up after the market low in the early 2000s. But I assume you're not suggesting that that's what we're in for.
That's right. I think one of the principal differences is that it's the point. The cap is roughly 15 times X the Mag 7. The Russell 2000, if you look at the profitable companies there, have multiples more like 12 times. The non-profitable small caps in the Russell actually have leverage either to economic growth or to risk premium declines. So you have sort of double within the small cap index of quality companies having multiple expansion, but also sort of risk appetite growing and allows, whether biotechs or some of the regional banks, which will have future growth, but actually don't really earn money right now.
All right. Yeah, we'll see if all can coalesce. Tom, appreciate the time today. Thank you.
Okay, so today's Tom Lee is, of course, talking quite a bit about the stock market and how we are looking still very bullish. I'm going to go through some charts on that as well, but I just want to take a weekly snapshot really quickly here and just show you some of the things that we saw this week specifically. Right now, energy actually looked very, very, very strong. Oil, gas, all looking good. Oil is actually starting to break out, looking very solid, as people would say. Healthcare is actually looking somewhat weak. Pfizer has actually been sort of the outperformer market thus far. But again, healthcare is looking very good. But again, the comm services, so people are rotating into Google. Google, as we know, has been beaten down quite a bit. Meta's actually down off that large bullish run off of their earnings, as we know. And Apple, people are starting to buy back in Apple, again, beaten down sector. So it's looking a lot like a rotation. Microsoft, Nvidia, semiconductors are starting to lose their luster a little bit here. But, again, application companies are just getting absolutely clapped. And look at Salesforce, Uber, some other ones in Tesla. Oh my good God. One of the worst performing stocks in the market this year. I think it's down over 30% at this moment. So again, there's to discuss about this market. Again, this is going to be an interesting conversation where we sit this week. And historically, after quad witching, which is what we just entered out of, okay, we're entering a week after quad witching, is historically bad in the market. So it's something to definitely keep in mind of. And so, guys, what are your general thoughts on last week's market moving stocks? I mean, the worst performing stock, and Tesla's right behind it, and they both had horrible weeks. We all know the problems of Boeing, but what are your general thoughts on the stock market? Are we moving into a rotation, moving into cyclicals, industrials? And again, Tom Lee talked quite a bit about small caps. So might be time to look back at Cathie Wood stocks. RK calls are pretty cheap. I actually bought a few last week. And so there is something to be said about some value trades. I'm going to go through a few of them for you guys today. So again, let's look at fear and greed. Currently, we are, getting extreme greed, as we have been for a very long time. But there's a lot to be said about the market in general, right? The market has actually been very resilient. Now, I will say this too. I was going to try and find the article, but Goldman Sachs says we're going to see the VIX here close to 20 here at some point this month. And so that within the next 2 weeks, we are expected to see some volatility. A lot of people are talking about that now. Whether that happens or not, your guess is as good as mine. But again, the economic calendar this week, Jerome Powell is going to be speaking, so we're going to see what he says there. Now, interestingly enough, here's the S&P. Again, we're still an upward trend, folks. I mean, this is... nothing looks bearish to me, okay? I mean, very clear. I mean, as we get to the bottom of the channel bounces up, right? So what would this tell you guys right now, okay? Doesn't take rocket scientists to figure out. Probably time to buy, all right? So I'm not saying be bearish at this moment, but at the end of the day, there's a lot that can happen this week. So I'm a big believer in being cautious, right? So I'm going to talk a little bit more about that. So let's talk about the equal weight. Again, a whole lot of negativity here, folks, right? Again, we dropped quite a bit on Friday. Weakness. Look, be cautious is what right? At the end of the day, does it really matter? Just be very cautious. Understand that the market is rotating. Let's take a look at the NASDAQ. The NASDAQ technically has broken out a little more than S&P. And we all Mag 7 has actually been taking a lot of damage. But again, it's starting to roll over a little more. And it's starting to potentially go down. Again, we're anywhere around 17,600. That's where I think we really need to start getting a little nervous about the NASDAQ moving forward. But the mid caps look very solid. I do have an alert on the mid caps at this moment. I do think the mid caps look great. Small caps look great as well too. Dow Jones looks like it's kind of just, again, there are corrections. They go down. There's corrections over time. This is right now we're showing a correction over time, not a correction of really going down. Now, IWM has actually been kind of an interesting one for me. Again, Tom Lee talked quite a bit about that in that video. And again, I love Tom Lee to death, right? That guy is, he's a lot more about the market than I'll ever know. And bottom line, he's a very good job of really where the market is going to head moving forward. And he said, people are buying the dip. Buy the effing dip, folks. And that's what I've been doing for a very long time. And right now, the IWM has really been where he said, keep going. Now, again, this is a lot like a topping pattern to me, right? If we drew an M pattern right here, there's a lot of things you could say about this, but this looks somewhat bearish to me. So there's a lot to be said about where this is really going, but I do think in the long term, IWM small caps could be, a trend here, guys. Notice, boom, boom, boom. One of these guys, this is about as blatant as you can make it. Now, again, the Goldman, we're going to hit 20. Right now, we're at 14 and change. Okay, notice 16 where the gamma flips. And that's where you're really going to start seeing some general volatility in the market. So again, on a daily basis, this is what I look at. I look at the VIX always in the morning. Where's the VIX going? I usually set alerts. Actually, I'll set one right now and we'll go from there. So there's a lot to be said about where I think the VIX is going to go. And I'll adjust it just a little bit here just to see what it does in the morning. Now, bottom line, guys, again, watch the VIX. VIX anywhere 16, watch out. Notice we've touched it 1, 2, 3 enough times. Is this the time that we actually do break through 16 and actually go gamma flip? Who knows, right? Again, Jay Powell's going to be speaking this week. It's going to be very interesting. Now, a couple of ideas. Again, UVXY, it's just one that I trade a lot. Again, it's in a downward channel, so I really wouldn't say, don't go on this, right? But in and out trades, I actually traded it quite a few times off this volatility last week. I actually did very well on it, but have some general protection on this moving forward. a lot to be said about that. One thing I would also say, let's take a look at the dollar index. Look at miners here as well. So look at the Dixie. Now the Dixie's in a downward trend as well too. But guys, watch this right now. The dollar index is looking like it's about to break out. Specifically, notice I have had here for quite some time. Actually, I think I've had it for a few days. This is where the Dixie's been sitting. And I tell you, I think we break through this. There's a good chance we go a little higher and we start testing some of these. And again, notice if we go, when the moves up, the stock market goes down. So this is a conversation around volatility in the market. Again, it's something to be aware of. Now, again, as you can see, we're in a downward trend, but it's something to always keep your eye on and just aware of those levels. So let's talk a little bit about Bitcoin. Bitcoin's actually looking pretty good today. I was kind of surprised. I was really not expecting it to be looking this bullish over the weekend. But again, as you can see, crypto is actually very much in the green as of Sunday. We're almost up 5% on Bitcoin, which is a little bit of a shock to me. To be fair, I actually thought we were going to be selling off a little more, but we have not. We've actually rallied back quite a bit today. But again, this is my trend line. We have not quite hit it today. Oh yeah, we're right. I thought we would hit. Oh boy, we are kissing it right now. So again, this is the daily high. Have not breached that yet. So my thoughts is we're probably going to drop a little bit off this, as you can see, but it is something to take a look up and be aware of. Ethereum is actually looking a little wickier than Bitcoin at the moment, which I think is interesting. The daily high isn't getting as close to my target specifically, but again, it's looking if actually I'm going to bring this down a little more and an idea. But again, the daily high has not been breached again, so very curious to see what happens overnight. And again, I think if we go back down, if we test 3,500 again, I think there's a good chance we go all the way down to 34, maybe even test a low down at 3,200 at some point this next week, especially if we get some volatility from old Jay Powell, as we know. Now, I'll highlight just a few coins that I like. This is my main portfolio, I would say, for the most part, but Render, this one right here has been one of my favorite tokens that I've been investing in quite a bit. Again, guys, nothing to say, but absolutely momentum on this here, folks. And so again, these are a lot of the, much like NVIDIA, the AI plays as far as crypto is concerned, Graph, Fetch, and Near, all really the AI type play coins, as I understand it. Again, what are your favorite coins that maybe I'm not paying attention to right now? But these are the ones that I've been focusing on quite a bit. And again, I would say this at this moment, typically the way I handle it, whenever I see Bitcoin start to get a little volatile this way, if this breaches down, I like to kind of stay a little more as trimming positions. I trimmed a little bit on Render, Graph, and some of these coins really over the weekend. Took some profits, took some gains. Again, I do think Jay Powell this week could be interesting. So let's just wrap up here and talk a little bit about the week ahead. Monday is basically a nothing burger. We're getting the home builder confidence index. No one really cares about that. Bottom line, it's like whatever. It is what it is. We are talking about housing starts, building permits. So we might see the home builders move a little bit more on Monday and Tuesday. Again, statistically speaking, folks, we are down typically the week after quad witching. So be very cautious about, going. Take time to take a little bit of profit. Again, there's a lot of conversations around what is going to be happening specifically. This is the big one right here. The FOMC, Jay Powell, old JP is going to have a press conference and he could move the market rapidly, folks. So there is a lot to be said about this, folks. So I would just say this, be very cautious on Wednesday. I typically always like to trim a little bit going into Wednesday just to make sure that I know what's going to be happening. I think a lot of people will buy into it or sell into it. So depending on what happens, if you're seeing people sell into it, you might see a bullish event. If a lot of people buy into it, you might see a bearish event. You never really know. And again, I always tell people just to be very cautious on Wednesday because you never really know how it's going to move. Now, again, we all know inflation's moved up. We saw the CPI numbers from last week and the PPI numbers. Guys, it's not going to be pretty hawkish on Wednesday. And again, Thursday, we have initial jobless claims, PMI, existing home sales. Again, we're seeing a lot more Fed talk. Again, Friday, more Fed talk. So again, if I just say this next week, it's going to be fairly volatile. So I would just say be ready for a bumpy ride. That's all I got.